అతను అడిగా, అడిగితే వినోద్ మాట్లాడుతాం సార్ అన్నాడు. వినోద్ మాట్లాడాడు, అంత అయిపోయింది. సో ఈవినింగ్ ఫోన్ చేసి, సార్ మా సిస్టర్ ఇస్ నాట్ దేర్ సార్ అన్నాడు. సో స్టార్ట్ పోయి రాజు గారు. సో రాజు గారికి చెప్తే, రాజు గారు నేను ఉన్నాను కదండి, పిల్లవారు నేను చేస్తాను అన్నాడు. ఆయన రాత్రి పాపం పిపిటి ప్రిపేర్ చేశాడు. సో చాట్లో మీది
నిన్న వచ్చింది సార్ ఇన్ఫర్మేషన్ రికార్డింగ్.
today only change it.
So these things you don't expect.
Yeah, we don't expect such kind of things. So anyway, stand by. మేము అనుకునేదంటే మీ నాగరాజు అండ్ రాజు గారు these three are stand bys for this discussion.
Every month we can't get people.
Actually, there are slight changes in the program. First speaker was unable to attend because of the death in his family, and again the second speaker yesterday we got an alert, Siddharth Tatnada, and I think his sister is not well late evening yesterday, so that was a change. And Raj Garu has accepted our last minute request, and thanks to him now, and same subject will take by Raju Garu, and Nagaraju will cover the some Fibonacci if the time permits us. Okay, and let us run sir. I think Raju Garu introduction మీకు ఎవరికి అవసరం లేదనుకుంటాను. All of you knows. You attended that RSA also? You didn't attend it, right? I think sir will give his introduction himself better.
Foremost, one thing is I request you to excuse if any errors were there. I started at around, I think, about 9:45 in the night, and I could put, of course, he told me maybe 3 hours earlier, 3-4 hours earlier to that, but I was in a meeting. By the time I closed it, came home and started, it was quite late. So there could be some aberrations here and there. Please bear with that. But whatever the aberrations you find there, I will ensure that during the course of the discussions, I will clarify everything. That much I assure. And last time when this RSI was discussed, you would have seen that all the charts I use are on the candlesticks, because every chart which you saw that time were of candlesticks. There is some specific advantage of using candlesticks, at least I find it, and many traders in the world, they find it. Interestingly, candlesticks to the Western market world was introduced sometime during the 1980s. It was not very old one. Till the time, it was the domain of only the Japanese traders. Started in somewhere in the mid 1800s, or mid to late 1800s. Only Japanese traders were following this. It's not coming? Oh, okay. We have some hand? No. I think hand mic. Yeah. Okay, before that comes. So, and this charting technique, what we call as candlesticks, in fact, this was at least 100 years prior to the Western world invented what we call the bar chart. Line charts have been there for a long time. Bar chart, which is normally the Western domain, like the Europe, America, etc. About 100 years prior to that, the candlesticks were used in Japan. But those days it was basically for, it's not the stock markets, but about commodities like rice and things like that. And then what happened, one of the Japanese traders who also had the training in English language attended a conference in the United States, and then he introduced, this is what we use. And slowly it started, people started showing interest into that. And a gentleman called Steve Nyssen, he spent huge amount of time, I think a few years of research, and published the first book on candlesticks. So what all we understand today in the English language was from what Mr. Nyssen has introduced. After that, there are hundreds of books that have come, but this was the beginning. So from this, we'll try to understand what is a candlestick, how many of you use candlesticks, by the way? Okay, good, yeah, fine. Candlesticks, before we start off, one word of caution I would like to put it is that every candlestick, yes, it tells a story, no doubt about the price movements and what is the buyer and sellers equation, how is it moving, etc. It does tell a story, no doubt about it. But the fact is that all these things are the patterns which we identify on candlesticks are contextual in nature. It is in the context in relation to the market, where the market has been trading for the last few days. The current signal, whether it is based on a single candlestick or two candlesticks, three or even more, the patterns they emerge on the basis of these candlesticks. So this is dependent on the basis of the context. By itself should never be taken as an indication for either a long or a short, either to buy or sell, etc. So these are the few things we should always keep in mind, that it should be understood only in the context of the market at the given time. Okay. With this introduction, let us start with the person who actually developed at the top because price went a bit above. Some slightly above the low but below the open. So this is the third set of candle. And fourth candle, price opened, after that it never went up. It all, during the day it went down only. And then, but close happened above the low. So these are the four sets. Like this, I mean, these white and black candles structure is similar. In one case, the price moved up when, the price closed above the open. In another case, price closed below the open. That's the difference between white and black. Okay, these are two important sets of candles. We have a third set. If you look at the first one, yeah, this part, if you see that, doesn't look like a candle at all in the first place, right? Just a small dot. What does it indicate? What does it mean? Price opened, closed there, never went up nor down. So there is only, you don't find any real body or any shadow going up. This is what happens is normally when a price opens at the ceiling, you have the upper ceiling or lowest, it opens at that place and doesn't move at all. It can happen either in the downside market or in the upside market. So this is just a line. Open, close, high, low, everything is same. And the second one, price opened at a particular point, moved up during the day, moved down also during the day, but when it closed where it opened. So there is there are shadows on either side, but price opened and closed at the same level. And the third set in this, price opened, went up during the day, but by the time the market closed, the price came back and closed exactly at the place where it opened. So there we have the entire thing is an upper shadow. Similar thing can happen for a lower shadow. Market opened at a particular price. During the day went down, went down, went down. It never went above the open price. But by the time the market closed, it came back and closed at the place where it opened. So we have prices opening and closing higher, one set. Prices opening and closing lower, another set. And third set is prices opening and closing at the same. Within that, you have four different possibilities. So these are the three sets of candles. Okay, and what I propose is, like if any questions are there on this, instead of waiting for the end, I prefer that if any questions are there, you can just stop me and ask, because the understanding will be easier.
What is the implied meaning, sir?
We'll get to that. We'll get first understanding this, because each candle and different models of those candles will have different meanings. We'll get to each of those things. Yeah. And one more thing is, it's not that I'm telling there are only 12 types of candles. These are the 12 variations. Within each of these four, you find different structures for each one, like prices opening and closing higher, prices opening and closing lower, opening and closing at the same place. Within this, we are giving the basic structure of four, but within these four, you have different varieties of things coming up, either on its own as a candle or in combination of sets of candles.
This is one candle which Sir is mentioning that without any body. It's
No, I think you can move, convert into a candle itself. Yeah.
are here. This is the open high.
No, we will get back to that because when we talk about the significance of each type of a candle, we'll get back. I mean, basically, we are now just looking at trying to understand how a candle is drawn, what are the types of candles. Yeah. Yeah, we'll go to the next slide. So, he asked what is the implied significance of each of these candles. Now that's what we are trying to understand.
You may change this color, sir.
Change it, not an issue. Whether
Because
is the white.
it is not visible there. This
Yeah. Right. You can change. Yeah, but each one you have to change. That makes a huge time effort. That's why I didn't start in the morning. Yeah, but I'll explain. Okay. In Japanese language, maru bozu means it is clean shaven. Basically, like when you go to Tirupati, what you say is clean shaven head. That's what is called maru bozu. So that is the name they have given for the first one. Here is a candle where it opens and never comes down, keeps going up, and closes at the top. So you don't have any shadows. This candle, I mean, it's not so important to remember the names or anything, but understanding the structure of a candle is more important. Okay, this Maribozu candle opens at the lowest and closes at the highest, or alternatively, it opens at the highest and closes at the lowest of the day, or I mean, depending on what period you are taking. It could be 1 hour, 5 minutes, 1 week, 1 month, and some people even use an yearly candle. So this on the black, that is the black Maribozu, and this is white Maribozu. That's it. Okay, this is the first part. And all the white candles, by their nature, indicate that they are bullish candles. That means price has opened lower, went up, and at the time of the close, price was higher than where it opened. Then there is something called opening Maribozu. Where is the clean shave? That is where the identification happens. So the price opened, and that is also the low. It went high during the day, but by the time it closed, it came down and then closed, but not at the high, slightly lower. So here the clean shave is at the open, so it is called open Maribozu. And then opposite to that is a close. Here what happens, price opened at a particular level, went down during the day, but by the time it closed at the very top. So clean shave is at the top, which is the closing. So that is why it is called as closing Maribozu. So these are the three types of this specific type of candle called Maribozu. Similar things are there on the black candles also. The only difference there is that price opens at a higher level, closes at a low level. In the black Maribozu general, it opens at the high. The open itself is high and close is the low. So there is no shadow at all. In the second case, that is closing, where the close is at the bottom. There is no shadow at the bottom. So it is called closing Maribozu, and then finally it is the opening. That means it opened at a price which is also the high for that period, and after that the price came down but did not close at the bottom. It closed slightly higher than the bottom but below the open. This is the general structure. Okay. I told you this is the name taken from the place where the inventor of candlesticks operated his profession of trading. Doji. What is a doji? Doji technically means open and close are the same. This was the original meaning of doji. But we know that all the trading happens on the basis of probability. We do not have any specific, what we call as, there is nothing called certainty in the market, right? Everything is operated on the basis of probability. We trade on the basis of a probability that the price will go up. There is no certainty that price will go up or go down. So, taking into consideration the probability factor of the technical analysis, here we are not that much confined exactly that open price and close price are the same. If they are close when compared to the range of the day, if they are close, open and close are nearby, that is what we call as the dozis. So the first part, if you take it, there is a different name given to them called spinning tops. Okay, spinning tops are where the open and close is relatively, that means the real body is relatively small, but there is a shadow at the top and also a shadow at the bottom. Similarly, for a black candle also, the real body is small, but there are shadows on either side of the relative body. If you look at why the name came is, the children who play, nowadays I think you get these small tops where they spin like this and they keep rotating. What happens when it is rotating? You find only a small this thing in between, and there is slightly a shadow at the top and a slight shadow at the bottom. That is the same name they have given. Okay. Only when there is a body, slight body is visible, we call that as spinning tops. Here, please remember, this top has nothing to do with market tops. The top, what we are talking about, the toy, they are called spinning tops when when I spin a top, that's what they are talking about, is nothing to do with market tops, market bottoms type of things. And then the other set is a dragonfly is the name given, where the shadow at the bottom is longer relatively, and the real body is towards the upper half of the shadow, but the body is very, very small. It may be just open close at the same price, or it may be slightly different, but it is very small. And then you have gravestone, where price opened at a particular level, moved up during the day, went relatively higher, rather significantly higher, but did not sustain that up movement, came back and settled at the place it opened. If you look at it, it looks like a gravestone in the sense that in the grave, somebody, on the gravestone is kept something written about the person who is lying there, right? So that's how the name came for that, it's gravestone. And then there is something called a takuri, where there again, unfortunately, there is a long shadow at the bottom of that white candle. That is called a takuri, where there is a long shadow below, but there is no shadow on the upper side. Possible that it's sometimes a small shadow upper side is also possible, but there is another name for that. I think most of the Asian market calls it as the hammer. Asian market sometimes also refers this also as hammer, and US market calls as dragonfly. Different names people call, but what is important is try to understand how, and there is a shadow here. Okay, what does dragonfly?
Price.
Pardon? This one, these two.
Price goes on but reverses up.
Yeah. No, it opened, went down, but closed.
That means it came back.
It came back, but was not able to move beyond its open price. And similarly here it came back, but now it did not go all the way to the top where it, the high of the day, but settled slightly below. And if you look at all the dojis, the moment a doji is there, whether with shadows or without shadows, the indication, the implied meaning of that is that the market is not able to decide which way it wants to move, either up or down. This is the understanding of the market. When we find a doji, either an exact doji like this or like this or this, or this way where the real body is small, it is an indication that the market is indecisive, whether it wants to go up, go down, or maybe move in the sideways for certain time. These things are not clear. But wherever you find this body, white or black, it indicates that if it is white or green, it is an indication that slightly bullish, and if it is black or red, it indicates that it is slightly bearish. But it is still indecision, but not that unlike the other candles, what we have seen here, like these ones. If you look at all these are considered bullish candles. All these are considered bearish candles. But when we come to this type of candles, we see it is not clear whether the market will go up tomorrow or the market will go down tomorrow. That is the indecision part. So that's why everywhere it was, this is basically an indecision. These are also indecisions basically. But what happens, why I put as reversal here is that, say we take the example of a dragonfly, for example. What is the structure of the price that day when this bar actually formed? Price started at a particular point, went down during the day, and then tried to come back and settled at the open. It's not able to go up nor. So here what is indicated is that the price action of this day indicates that perhaps either a bottom or a top is formed. That means all the people who wanted to buy, the bottom of the price, there is no demand above this. So what happens here is these are what we call as the reversal patterns. So I talk about reversal patterns in details. Doji is basically an indecision. Depending on the price action of the following day, the confirmation whether it is a actual reversal pattern or not is identified. So we have to wait for the price action of the following day. So these are all the very important popular reversal candles, and this falls into the category of what we call as the takuri. What we have seen, where takuri is, that means either both sides or one side there is no shadow. So there are different names for that. The first one, there is a shadow here, so but there is no shadow above. That is a takuri. This is the black one, exactly the similar one, but the black one. And here, open and close are same, but price has gone down during the day significantly. And wherever this kind of body is there, this type of candles are formed, they are also referred to as the hammers, because it looks like a hammer. You have a wedge at the end and a long stick. So that's why it is also called a hammer. A hammer may have a shadow above or may not have. Normally what happens in the normal hammer we look at, there is something above the wedge, right? So that's why it is called, that's how the name came. That is nothing so specific about it. Some names are given depending on the structure. And here the difference, if you look at here, there is no shadow at the top. Here there is no shadow at the top on all the three. There is one is white, another is black, both with some kind of a body. The third one is without body. Second category is, they are similar to this except that there is a shadow above the real bodies. That is the only difference between the first set of three and the second set of three. Both are called as hammers. And then the last one, what we call as the hanging man. the white one or the black one. Here also you have a big shadow. At the top, you may or may not be having a shadow. That is not important. Why it is called hanging man is that the name, in the market, there used to be a what we call a cliche. What they used to say is that when a pattern like this was seen in the market and somebody wants to buy at the tops, perhaps that person has to hang because of the ensuing losses he has to suffer. Because these are the things, these two are so important even today. Like hanging man patterns, they find to be very, very significant reversal patterns, particularly when they are happening at the tops of the market. When we say tops of the market, it also presupposes that the market has gone up significantly, and there you find a pattern like this. I think maybe here we can look.
First one and
First one and
Hanging man.
two, fifth, yeah.
here it's
Seventh, sorry.
this one.
Ah.
This one, the difference between these two is one is white body.
First one and seventh.
First one and seventh one.
Yeah. See
The
here.
Yeah, right.
Side.
The
Only lower shadow.
No. What is the difference? Anyway, good question. Let us see. What is the difference between these two? Body size. If the body size is relatively large, for a hammer, body size should be lower. It's smaller, sorry, not lower. Body size should be smaller. When the body size is large, that means it almost comes to about 50% of the total range of that entire candle, including the shadows. That's the only difference between hammer, a standard hammer, and a hanging man. Sir, I think we can look at some charts. Let me see if I put a chart here. No. Some candle chart. No, the idea is that if we see some of the charts here.
Do you have, sir?
Pardon? A couple of charts are there. But no, you can put a chart so that they can identify here something is there. Whatever chart you have cut, the chart, that is fine. Yeah. Right. Suppose, okay. Suppose see here, this is one chart, and this one we have discussed, if you remember. What is that?
Hammer.
No, this
Dragonfly.
one.
That is
Sir.
dragonfly.
And also, if you do, we don't identify it with by the name, it is basically a dozy. Yeah, fine. Suppose here, this is what? This is what hammer or hanging man. Hammer is this, right? This is more a hammer. Yeah, this is also like
nearby. It's
nearby. Yeah,
easy.
right. Yes. And then what is this? This is very clear.
But,
A smaller body, long lower shadow, and a small upper shadow. And here we have any idea what was that?
it is
This.
gravestone.
Gravestone, perfect. So if you look at the reversal patterns, why we call them as once it happened, the way the price came down. And as I told you, I repeat that, it is contextual. If the same thing happens in a sideway range, we don't take it with any significance as such. But if it happens at the high of the market, then this is what we call as the reversal patterns. Yeah, some of them will get back. This same chart you can keep. We'll use it because there are other patterns that are coming up. Yeah. Sorry. So these are different sets of, we have seen Takuri, hammer and hanging man. If you look at the next one, you able to find any relation between this and this?
Opposite.
Exactly, they are happening in the reversal side. That means the sorry, excuse me, the shadows are now at the top. The formation is, that is the only difference. In the earlier case, we have seen all the shadows, longer shadows at the bottom. The same things can happen. What happened?
1 second, sir.
Yeah, right. Okay, now the longer shadows are on the tops. Effectively, the meaning does not change. They actually give the same kind of understanding. Here is a white body with a long shadow. I think it will be visible more here. The first one. And this set is what we call as the shooting stars. These two are shooting stars and this is a gravestone. The gravestone variation, if you look at, these are basically without any lower shadow. A variation of these three can be like this. What is the difference is, the possibility is that there is a small lower shadow here, as much as when we saw in the earlier case, there is a small upper shadows above the real body. So that is the only difference. The only thing is that it's not just, it should be like this only without a lower shadow. It can be with a lower shadow. And all these you can consider with single name if you want to look at. These are, I mean, some of the books talk about as inverted hammers also. The earlier one, which we saw as hammers, these 6. This is the basic set, this is a variation of this. If this is a hammer, sorry, this is inverted hammer.
One.
Pardon?
The 7th one.
7th will come back. We'll just get to that first. Let us first. See, this is what I am talking about. These 3 and these 3, the only difference is that there is a lower shadow. That means price is closed slightly above the low of the day. But for understanding the meaning, it doesn't make much of difference as long as the structure is similar. But these two, there's a big shadow here on the white shadow. These two are what we call as gravestones, where the bottom, in a gravestone, basically what happens is that you don't find much of what we call as below the, much of lower shadow below the price. And here is another variation, which is the difference here when compared to these things is about the body again. You find a larger body, also with a larger shadow, upper shadow. Right? Are any questions here? We will before we.
The 7, does it mean it's a bullish? Sorry. Not this one.
Yeah.
Because the price closed higher than the low.
Price, yeah, I'll tell you, the meaning I'll tell you. Here what happens in all these cases is that these are identified and technically they are reversal patterns, any of them. Why we will call it as reversal is, reversal can happen at the highs of the market or at the lows of the market. So here, even if you take with these larger bodies, what happened in this case, price opened here, went all the way here till the top of the upper shadow and finally settled here. So the settlement is roughly below the midpoint, what we call as the median price. Similarly, this one, indicating that the strength, in this case, the bullish strength, or in this case, the bearish strength, bullish strength here is relatively low. The candle is green, price action has moved up and closed higher than the open, but it's not able to sustain all this area. By the time the market closed, it came back and settled significantly lower than the high of the day. If this pattern happens at the highs of the market, I mean, that means if the market has gone up for a few days and it is trading at the highs and this pattern happens, this signals that the buying power is, I mean, considerably depleted, and it gives an indication as that we should be careful. And this one, it gives and this black candle happens at the top of the market, at the highs of the market. It gives much stronger signal than this. The market opened here, went all the way up, and remember the market is already at the highs, and then came back all the way and closed at the bottom, indicating that the buying power or the bull power is totally depleted. Now actually many people are selling hard. And when, as I told you, it is contextual. If you actually add what we call as the volume parameters to this, and if the volume is very high, suppose compared to its average volume or maybe yesterday's volume or a few days earlier to that, if you take it, the volume action, this also gives an indication as to what is happening in the market. There is another set. Again, candlesticks predominantly are good for identifying reversals. That is the what we call classic utility of candles more than anything else. It's not that they are not useful for others, but predominantly the greatest advantage we derive out of studying candlesticks is for identifying the reversal patterns. Reversals where the market is turning either from up to down or from bottom to up. So that is the most important aspect. So here there is not much of difference between the two. It is called dark cloud, where there is a strong green candle or white candle. Here also a green. If you look at, both candles are relatively strong. That means the real body is significantly large. They are not smaller ones like dozis, hammers, etc. But here what happened was the market moved up and up. Yesterday it closed near to the high of the day. And then what happened? The next day price opened higher than yesterday's close. And then it came down. Closed much below the open. Here the only criteria we have to take into account for a dark cloud cover is that the price should close below the median price. That means real body, 50% of the real body. It should close below that. Then we say that it is a dark cloud, as though there is something, a dark cloud has come and is actually overshadowing all the earlier bullish price action of the earlier days. So this is an indication that all the buying power is over. Whoever wanted to buy has now bought already. There is no buying power anymore, and now people are looking to book profits and selling. What all we need to look at here is this. What is important in this pattern is only the real body. Shadows do not give any significance as far as dark cloud is concerned. We'll talk about the other one also. Okay, what is important, whether shadows are there or not, it's not very significant. But the significance is only for the real body. The market has moved up. It is trading at least what we call as the intermediate or intermediate term highs. And then after a few days of bullish action, you find this black candle which opens above the prior day's close, the real body, which has opened above the prior day's close but did not sustain there. After that it came down and closed below the midpoint of yesterday's real body. So this is what we call as the dark cloud. This is at the tops of the market. This is relevant only at the highs of the market. That should be remembered. It is significant only at the highs of the market. Then a similar thing can happen at the lows of the market. How does it happen at the lows of the market? Market has been falling for a few days. It has been a bear market for some time. And then one day the price opened, came down, strong down close, indicating that it closed almost near to the close of the day in a market. Normally signifies that this is selling, selling opportunity, right? That means the downtrend is very strong, even at the bottom. Then suddenly next day you find a candle opens below the close of yesterday in a down market, but then it starts moving up and closes above the midpoint of yesterday's real body. That is an indication that the market is now turning up. This clear, or any more questions or any clarifications you want? This is at the top of the market. This is at the bottoms of the market. Yeah, this is only an indication. I told you again, it is contextual. You have to see for other evidences. If suppose here you find huge amount of volume on this day, indicating that above, say, something like maybe a monthly average or a 50-day average volume, or if you even look for last 2 days or 3 days of volume, if you look at, and then suddenly there is a significant surge in volume, indicating that suddenly so many people are buying it. So this indicates, and then yes, as a confirmation tomorrow when it opens, if it opens above this, that is the confirmation. This another again reversal patterns. If you look at what we have been actually progressing, I think I'll take. So this is where we started, reversal patterns. The reversal patterns here are all related to one single candle. Any one of these candle is an indication by itself. There is no relation with another candle. Then we move to a combination of two candles giving some kind of a signal telling that something is happening. There is a reversal possible here. But here this particular thing is in relation to both the candles. It's not just one. And here again two candles. Sorry, I think I didn't give the name for this. Yeah, the first one we call as dark cloud. The second one, when it is happening at the bottom, it's called engulfing. Either, if you want, both can be treated as engulfing. It is it is bearish engulf, and this is bullish engulf. In both cases, in case of a bullish engulf, bearish engulf, it happens at the highs of the market, where there was a large green candle followed by again a large red candle that opened above the close of the white candle and then came back and closed below the midpoint of the white candle body. A bullish engulf is where the market is sliding down and it had a very strong red candle with a large body, but the next day price opens below the close of the earlier day and then started moving up. It's not so important whether you have a shadow or not. Then it went up, closed above the midpoint of the red candle. This is bullish engulf. This is, you can just call as bearish engulf. to make it simple. The language, I mean, the way you identify with names is not all that important. Yeah. Thank you. Thank you. So another set now. I mean, if you look at the way the candles are structured is to what extent the relationship of these two candles in terms of the height, where it is opening, where it is closing. These relationships make the candle structures and patterns. Here, this is what we call as the engulfing patterns. Let us first understand what is an engulfing pattern. When do we say there is an engulf? There is something here and something comes and closes it fully. That's what we call as engulf, right? So if you are look at here, there is a black candle. That could be with or without shadows. What is important again, even for engulfing and harami patterns, is also the real body again. We are not that much worried about the shadows. So if there is a candle here with a real body, and then next day another candle forms with a much larger real body, but that real body opens, or rather, I mean, that other body extends beyond either side of the earlier day's real body. That's what we call as engulf. And this we call as a bullish engulf. Again, when we say bullish engulf, the indication is, I mean, rather the understanding is that a bullish engulfing pattern will happen at the lows of the market. A bearish engulfing pattern happens at the highs of the market. This is a basic understanding we need to consider. Here, what happens in a bearish market, when a sliding market, the prices are falling. One day, it formed a real body like this. Price opened higher and closed lower. We are not that much worried about the shadows up and down. Next day, price opens below the real body of the prior day, then goes up and closes above the real body of the prior day. Thus indicating, showing that this real body is fully engulfed. That's what engulfing is. This is called bullish engulfing, and it will happen, and it's supposed to, I mean, the significance for a bullish engulf is when it happens at the lows of the market. Opposite to that, a bullish engulf can also happen like this. An engulf can also happen like this. But what are significant, we have to look at it. These are more significant when compared to these things. Second one is a bearish engulf. Prices have been going up, and say a candle with a real body, a green candle with a real body is formed at the highs of the market, and the next day price opens above the close of the earlier day and then closes below the open of the earlier day, meaning thereby that price opens above the green candle's real body and closes below the green candle's real body. This is a bearish engulf. After that, the price is likely to go down. But engulfing can happen like this also. Instead of a black candle here, there is a possibility of a white candle. Similarly here, in the case of this bullish engulf, in place of a white or a green candle, possibility of a red candle is there. But more significant for us are these things. Some people, of course, take clues from this also, but very significant are these two. opposites, yeah.
We can totally ignore the shadows in this case.
Yes,
The
yes.
first candle.
Yeah.
They need not be engulfed by
No,
the
in any of the candles,
Ah.
in both the candles. The pattern is a combination.
The shadows need not come within that body of the
No, it's nothing to do with that.
the
It's
body.
only the bodies. What is relevant for this is both engulfing,
Okay.
is that the body should engulf the prior day's price action, prior day's body. That is, today's body should engulf the prior day's body. Basically, the body should be higher and lower. Both sides, it should be bigger than the earlier day's body. Okay, if the same thing happens in the reversal order, in the sense that it is an uptrending market, a price is closed like this, next day, price opens below this close, below the high of the real body, and then closes above the real body. That means this particular thing comes here instead of this order, and that is what we call this order. This is again a reversal signal. We told this is the bullish signal.
But if it happens at the top, to kind of.
That's what I say is this is a bullish signal, this is a bearish signal. A bearish signal should happen at the top, bullish signal should happen at the lows of the market. Now, we come to this. Actually, suppose this is actually the same thing, but the price action is opposite, in the sense that what happened yesterday and what happened today here happened yesterday in this case. What happened yesterday in this case happened today here. This is called harami pattern. Harami in Japanese means it is a pregnant woman. If you look at, if you look both together, it indicates, if you see both together as one, it looks like a woman, a pregnant woman. That's how the name came. And this is the reverse of that. This is with white candle followed by a black candle within the, because we can't call it engulf because the current candle is within the range of the body of the prior candle. That is the only difference. These are also reversal signals. How does it happen? This happens when the market is going down and there is a big or a significantly strong red candle formed at the lows of the market, and next day price opens above the close of yesterday and then moved up and closed higher, and all this happened within the range of this body, the red body. That is a bullish signal. If the same thing happens at the highs of the market, where yesterday's price action was very strong, it moved up and created a significantly large green candle, and today the price action actually opened below the close of yesterday and then also closed above the open of yesterday. This happens at the, this is happening at the highs of the market, that will give a signal of reversal from top down. These patterns also possible. A harami, this is also called harami. Only thing here is that you have a big green candle followed by a smaller green candle within the range of the real body. Similar is the case with the red candle, where earlier day there was a strong red candle, significantly large red candle, and today the price action actually contained within that body, but again a red candle. But normally, of course, as I say, some traders take clues from these also. There is people who take meaning from that, but at least for those people who are starting on the candlesticks, these are significant ones. Just try, from whatever we understood, try to identify, try to understand, we'll try to understand what are the reversal patterns and how they're happening. Where do we start here? Anyone? Idea is that we'll just identify the patterns, because there is a combination of at least 2 candles now. That's what we understood, right, for the first few minutes. What is this? This pattern. This one. No, I mean, let us, this green and this red. Bearish engulf. But did it work? It did not, right? Then what happened next day? This bearish engulf turned into a different pattern. What happened to that? It's harami, right? But where is it happening? If it is harami, this type of harami is what? It is a no. Piercing is a different pattern altogether. Harami is not piercing. This is harami, a green candle within the body of the red candle is basically what type of harami is this? Bullish or bearish? Bullish, right? A green candle followed, or rather contained within the body of a red candle, is a bullish harami. Where should bullish harami happen? Bottoms. And you don't have this price action. Forget about this for a moment. Where is it happening? At the top. Should we take it? So idea is that if it is a bullish harami, it happened somewhere here, good, or somewhere here is good. It happened here. Suppose see here. What is there any difference between this and this? This is a harami. This is also a harami. Is it not? Look at, okay, the sizes are slightly different, but what I say is that this body is within the red body. Here also, this green body is within the red body. But the difference is that where is this happening and where is this happening? It happened after a market correction or slide or down price action. When it happens nearer to this gives a bullish signal. And what is this last one? This is Friday's price action. The red candle was on Friday. Bearish engulf. So what will happen will be known during the next few days. And now here, look at this. Okay, first let us, some of the things I mark. Here, look at what is the pattern here. Center part is doji. Doji is, what does a doji indicate? Suppose you are at this level today. For example, today is here. This rest of the thing is not known to us, right? The critical thing with the charts is that the right side of the chart is always a black box. Yes. We don't know what is there on the right side. We talk so much about only the left side. It can go to 1 year, 2 years, 10 years, 15 years. All patterns we can identify, everything works very well. But towards the right of the screen. So, no, a doji indicates what? No, a doji indicates indecision. Doji is never a reversal. A price action following doji the next day or the next few days can give an indication. But doji is basically telling that there is some kind of indecision in the market. Buyers and sellers are equally poised. Nobody is exerting the pressure to take over, like the bull pressure pushing out all the bears, or the bear pressure pulling out or pushing out all the bulls. Nothing is happening. Price is just, it's going up, going down, but finally open and close are very close by. It is an indecision. An indecision happening in a strong bull market or a strong bear market itself gives you an idea that possibly something can change. Because so far it is going up well. If you look at here, from here to here it went up really well, right? And suddenly there was a stall. There was stagnation in the market. Price was not moving much. It indicates that something is happening. Let us watch. That is a signal. And then what happened after that? a red candle happened. Okay, but not much of this thing. What we look at is, this is neither engulfing, so not of any significant what we call as a reversal pattern is identifiable. The price action is not strong enough. If you are already holding a position, perhaps it gives you the early signals telling that maybe the time is coming for booking your profit.
Exit.
Okay, then what happened? It moved a few days, then went up, and then look at the option here. What is this? A green body. And also, when we talk about engulfing and harami patterns, it is, the significance is that if the what we call this green body in this particular case, if it is smaller and is engulfed by a large red body, that is all the more important for the reversal signal. Here what happened after this? After this engulf, next day not much of downturn or anything, right? Except that the price action was bearish. The close was lower than the high. But after that, the price went down. And here, it gave a bullish harami. And from there, price moved up. And here, there is also a harami, right? But both the candles are red. That is also a harami, but both are red. And here it is a classic case of a green candle engulfed by a red candle. So whoever was having the positions, it's perhaps right time to exit. Any other things want to discuss on this particular chart? I immediately put the chart because actually on Friday I exited my position on Havells. Exited yesterday, yeah, with that pattern. I thought there's no point continuing.
The last square.
This is another area to be studied.
Pardon?
This area.
Yeah, I'm coming. Yeah, he was asking something.
The last square.
This one? Yeah. Last square, why I put is these two green candles.
Most of them are green candles, but
But these two particularly, these two, that's a green and green harami. But what we are looking basically is for a green and a red, indicating a reversal. So this is not, at least some people still take, what I say is that it's not that totally ignored. Some people take clues from that depending on this other price, this volume action, etc., that also is read with meaning. But because it's not read, possibly the significance is less. And these two are engulfing pattern, clear engulf after that. Yeah. Charigar is talking about this range, right?
Yes.
Yeah.
dojis 1, 2, 3.
Yeah, these are dojis, which is an indecision series of dojis, yes. And then what happened after a series of dojis? You found one day slightly, it started below, then closed high. After that, at least two strong bear candles, but then moved up again. Anything specific you wanted to tell, sir? Chari sir?
No, that indices area.
Yeah.
All of them are
Ah.
dojis. All of them are dojis.
Yeah, here also, if you look at here also dojis are there. This one. And what happens when the dojis are there? Some people would have exited also, but what all they missed is only this small portion. A doji gives an early warning telling that maybe it is time you should be careful with your position if you're already having a position. Yeah. So, we have time up to what time? We have to remind. Yeah. Now from a set of 2 candle patterns, we'll move to 3 candles forming certain patterns and giving again reversal signals to us. Okay, these are referred to as evening star. This set is referred to as the evening star and morning star patterns. So evening star is, what is an evening star? It's a normal understanding. Evening star comes in the night?
That means it's going to end of the
Going to. That means darkness is coming. So how is this indicated? There is a strong bullish candle and that is happening at the highs of the market, near the highs of the market. The next day, the price opens significantly higher than the close. It opens higher than the close. That means there is a gap up open, as we call, right? But here we talk about open higher than the close. Where did this black bar, where did it open? This black bar, where did it open? It opened here. And then after that it comes down and closes. Still higher than the close, previous day's close. So normally what is an indication? It opened above and also closed above yesterday's close. So quite relatively what we consider is that the price has not even come to yesterday's close, so it should be bullish. Fine. But we don't take any clue here. Next day, it opens nearer to yesterday's close and then comes and closes much below, and this low preferably should be below the midpoint of this white candle and closed here. This is what is referred to as evening star. That means there is a gap here, and then the third day, second day there is a gap up and close is above its prior day's close, and third day all that comes down and closes below the midpoint of the first day's body. And then it is likely that the market is reversing from the highs. A similar thing, if it happens at the lows of the market, the same pattern happens at the lows of the market, we call that as the morning star. That means now the sunrise is happening, and so this happens when the market comes down, closes on the day with a strong bear candle. Next day, the market opens below the close of the earlier day and then moves up, but closes below the close of yesterday. So yes, the whole body of the next day happens to be below the close of the prior day. Here it happened above the close of the prior day. And then the third day, price opens near or slightly above the prior day's close and moves strongly up and closes above the midpoint of the first of the 3 days. So this is the morning star, indicating that the price has turned up from the downtrend. These are called soldiers' patterns. Some people call these ones are also as the 3 crows. When you, Google or you see some book, these are also referred to as the 3 crows, and these are referred to as the 3 white soldiers. Or you can just say that 3 white soldiers are the 3 black soldiers to make it easy to understand. So this, what happens when these soldiers, white soldiers or black soldiers, is that when the market has significantly moved down in a bear market, then suddenly you find 3 green candles. The bodies are relatively small. They are not very significantly large bodies, They are, at the same time, they are not like dojis. They are relatively small bodies with or without shadows. It's not a big matter. And what if, and all these three, there should not be any gap, in the sense that there should not be a gap up. They are 1, 2, 3, and all of them, they are connected in such a way that there is no gap up between these two, between the three candles. Then, if this happens, it is a significant indication that the market has bottomed out and is likely to go up for at least a medium term. We are not talking about short term at all. So these are indications of medium term reversals. Similar thing happens at the top of the market. Here, relatively not big bodies at the top of the market, and there are no gaps. Three things happen. Three black or red candles happen with relatively small size bodies, again with or without shadows. Shadows are not very important, and that is an indication that the intermediate trend of the market is turning down. So these are basically some of the very important reversal patterns. I thought we'll discuss. This is a Nifty 6 months chart. Yeah, before that, we'll come to the, any specific questions on any of the patterns, the three soldiers or earlier ones? Or at least we can look at some of these patterns here. This is the Nifty.
Hierarchy of significance.
There is nothing called, yeah.
Highly significant, less significant.
No, all of them are significant. There is nothing called hierarchy. They are equally significant. But how the pattern is actually happening there? In the sense, suppose, what is the pattern in your mind when you asked about this? According to you, during the discussion, what is the pattern which you found to be significant? Today's discussion. Three soldiers, okay. What happens with, so one pattern will, sorry. Here what happens is, suppose these three happen with very large bodies and maybe very close to the closing prices, in the sense that there is no gap up, but exactly at last day's close, etc. It is yes, that means if you club together everything, the bottom to end, whether they are separate or close, it gives the same length of the body, suppose. That makes significance slightly less. The formation, how they are forming, is all the more important. Suppose these bodies are, all the three are very close to a doji, but still forming like this. We can take this as more significant because it is indecision at the bottom of the market. But during that indecision also, what is happening is that the bears are not much inactive, but the bulls are actually taking control of the market. Though it is indicating that doubt is still there, but 3 days continuity is moving up. So smaller the body, more significance.
I think it may also indicate the strength of the move
Strength.
after reversal.
Yeah.
These three candles.
Three candles. That's why we talk about three candles. Strength of the move in the upside here and downside here. Similarly, suppose he talked about engulf. Suppose we talk about the engulfing pattern, these two. Here what happened? The smaller this one and the larger this one, the combination is it is very small and this is very large. The engulfing pattern is very large, but the engulfed pattern is very small. Even if it is doji, a simple doji, followed by a large engulfing candle, significance is really high, because the first doji indicates that there is an indecision. The market is not able to decide which side want to go. That means bulls and bears, they are equally weighing it. The market has come relatively to significantly higher. It is trading at the higher, at the high levels, and then suddenly there is an indecision. And next day, this is a bullish engulf. So market is this is happening at the bottom of the market. This is a dozy, and suddenly you find there is a huge buying pressure with significant volume. If that is there, this indicates the significance is higher. But what I say is that whether this is significant, the engulfing is significant, or harami is significant, that way we cannot actually put them into something like what is number one, what is number two. All of them are very good reversal signals, where they are happening and how is this relationship within the signal.
Let me make my mind clear. What I want is significance of this pattern occurring. What is the probability of, suppose the pattern is bullish. So what is the, if pattern occurs, what is the probability of having price going up?
Oh, yeah, right.
That is one probability.
Right.
That's called the significance. Then if you based on having the strength of this or volume or some other factor, you have the strength of the move.
Right.
What could be the strength of the move?
Right.
So what I'm asking is the significance. What is the probability of if it happens?
Yeah.
If this happens, there is a 50% of chances it will go up. If this happens, it will be 80% of chances.
Yeah. No. All the reversal patterns have more than 50%. Because if you can name one of the stocks which you have recently been following, we can put the chart and see that. That makes it more what you call as.
Sir, Engineers India.
Yeah, Engineers India. Say for about at least 6 months you put it. I think that makes the chart more. In that, even if we take the cues, like suppose here it is a harami, this big red bar and as a red candle and a green candle.
Bottom or top?
Here, this one. But issue here is, it is in a ranging market. Is it really the low of the market? So if you, here what happens is, it's not that you cannot enter. When you enter here, where is your target for a trade? What is the target you really look at? In a ranging market, normally it is the top of the range. And this, if you look at, if you entered here, it reached that and then came back. And when it reached here, what happened? See, what is this pattern? Dark cloud, right? It is a green bar, next day red bar, closed below the 50% of, and then,
3 crores?
pardon?
3 crores, no?
3 crores, actually the third one is, the body is much below this, right?
Okay.
The body is way below this, because there should not be that gap between the bodies. Or you can suppose here, this is also an engulfing, right? But it is engulfing a red candle by a red candle. But still, actually, one way if you look at after the price action, it seems to have worked. But whether this downturn worked because of this engulf or the following harami, red and green, we can't really tell that. If somebody has taken this and worked without this harami, perhaps this engulfing also can be told as happened. But what happens is that every signal we also do not want to take action on. Where the more significant thing happens because of this. This is a more significant down. And another thing, this particular thing is, what type of harami is this? A large red candle, and within the body of that large red candle, we have a green candle, right? Is the harami. But what type of harami is that? Bullish harami. So where normally bullish harami, we want to trade at what point, level of the market.
No, bottom.
Supposed to be at the low of the market, like this. This is also a bullish harami. But it happened here. And it did not. After this, the price did not go even for a day. So these patterns are contextual in the sense that where is the pattern happening and what is the call we need to take. That is also important. That is all the more important actually. This is still Engineers India, right? Engineers India, if you have any significant points of this so that we can check those things.
Why this pattern can be called as 3 crores?
Pardon? No, that is actually 3 soldiers.
Yeah, 3 soldiers.
3 green soldiers, but the question there is, see the size of the bodies. The bodies are significantly large in the sense, again, whether they're large or small, we always take in the context of what is the price action, right? From here to here, if you take that price action, all these 3 soldiers are large, number 1. Number 2, 3 white soldiers or green soldiers is an indication of what? Is it a bullish reversal or a bearish reversal? 3 white soldiers, green, bullish. So a bullish reversal is supposed to happen at what time of the market? At the bottom of the market, and these are happening at literally the top of the market. Should we take that as a signal at all?
No.
So these are the things we need to work on. It's not that engulfing happening anywhere is good for us, engulfing or rather 3 soldiers happening anywhere is good for us.
It's place.
It's the place. At in context of the market where the market is trading, that is important.
Actually, in the Nifty, there are some discrete of patterns.
Yeah, you can put some charts, whatever chart. Or any of you have got anything we are working on, say, or 2 or 3 of the scripts, those charts we can put it and see.
These are the 3 crores.
Pardon?
These 3, sir.
No, but there are gap ups, gaps, and that is not happening at the bottom of the market. That's only a small intermediate small correction.
So these things are not applicable to Aikanashi.
No, Aikanashi is a different thing. That is a different structure altogether.
Let's take Tata.
Sir, Tata LXC ones.
It is trying to break out, but it is not happening. It's failing. Again.
Yeah.
Nothing. No,
See this?
Take the daily charts.
Achha, this is weak. Yeah, no, the issue is not, it can be a, what you call a minute chart, 5-minute chart, hourly chart, daily chart, doesn't really make, everywhere the significance is same.
no, it's somewhat sideways. You can see.
Yeah, here if you see, what is this looking like?
Star. Evening star.
But evening star, this has to be slightly, above the close here, that's the issue, but still it worked.
Why it is not evening star, sir?
Pardon?
Why it is not evening star?
Evening star, this red candle, how should it happen?
Gap up.
Should be, it opened higher, no doubt about it, but closing not below the this high of this green candle. Yeah, it should be at least equal is fine. Slightly higher would have been
The close of the
earlier day.
above the close of the
Yeah.
Like this. Like this. Gap and a gap. This gap must
So
be there.
what happened? That is the significance. But in this case, it worked. It worked for almost here. Though there was small. There was a small vertical correction back, but in this case, it worked all the way here.
And look at on the left side.
Huh.
There are 3 big bars.
Yeah. These 3, right? But they're not the soldiers. But soldiers, the body will not be that big. The bodies are relatively smaller.
Small.
I mean,
Here
idea.
then it is almost Mariboso, then
Yeah, Maribosu.
Yeah.
one after another.
Yes.
1, 2, 3.
Yes. And then here, this spot is engulfing?
Not exactly.
Not exactly. Okay, fine.
Was that pattern, sir, that right at the top, at the highest point, on the left?
This one?
No, even more to the left. Yeah,
This
over
one?
here. Top,
This-
top, yeah.
Top is something similar to evening star.
Dark cloud.
No, not dark cloud. Dark cloud should close below the 50% of the body here. It should, open above, but comes and closes somewhere below 50% of this body, green body.
So what is this pattern now?
This is very close. Actually, that's not very close to evening star.
Look at
The closest is the evening star.
On the right hand side, last 3 candles.
Here. That is the latest price action.
We look
Latest
at
price action, this one,
First
I am not
one,
whether, these two, whether it is looking to be it is a dark cloud, I am not sure.
because it seems
These
to
two
be
are seeming to be,
gravestone followed by a fall, then but
Yeah.
again it went up.
yes.
Another bearish candle.
Bearish candle, is it a dark cloud?
No.
Maybe,
Yeah, 50%, yes, sir.
I think slightly still higher, yeah. That's what, where the significance comes. Suppose this dark cloud comes closer to the open of the prior bar. The significance is normal. We take the significant, they take that to be really significant. When it is so narrow in the sense that it is very close to 50%, better to wait for at least 1 day price action to see, okay, how is it behaving. Yeah, any other one wants
Volta
to?
and NMTC.
Rolta.
What are the confirmations? Is the pattern of the
Interesting.
What is the volume? What is the volume?
Helium, yeah.
And there is any other?
No, that depends on what are the, candlesticks. Some people, there are experts who trade only on candlesticks and volume. That is a different part of it. Idea is that before experimenting, what are your standard things? Like, most of you who actually heard me talking on RSI, my major, one of the, favorite oscillator is my RSI. I start from there. And then all this adds to the weight of evidence about what I am thinking. Suppose I find a buy signal on my RSI relative to the price action, and suppose that also happens to be a reversal candle happening there. So it adds to my evidence. So what happens is, what is your trading style? How do you pick up your signals?
Yeah, if a pattern happens at an important support level,
Yes.
it becomes more
It becomes more important, and you are already in the position. Candlesticks gives you an early thing stating that maybe it is time is coming for our profit booking or exiting.
Sir, TV, last time TV listed it.
We'll get back. I think he has asked for Rolta. Let us just complete this and then, yeah.
Started with
This is Rolta, right?
Yeah.
Yeah.
So bearish candle.
On a daily chart,
This is what? Yeah, this. Yeah.
weekly chart.
No, this is daily only.
So bearish candle thing. Harami.
So this is a harami.
Dark cloud colors here. Another bearish candle thing here.
The last to close.
Last. Pardon? Last.
Last 3 candles are bearish candles.
Last two. If I'll tell you.
What it,
If a green candle happens Monday, here similar to this, that will give you a signal of what we call as the three white soldiers. As of now, we don't know. That is only an expectation. That if similarly a green candle happens starting somewhere just below the close of Friday, and it closes higher than the open price.
These
That is it.
patterns, they work on all time frames or in
All time frames. All time frames.
Even NMDC.
No, maybe best thing is you.
Problem is.
Yeah, no, you are already saved, so.
Yeah,
Okay.
many charts. I don't follow the candles. That's the issue.
Huh. Yeah, where do you want to start?
The last three candles.
Last three candles, yeah. So it's like, what is this? Bullish harami. And also confirmation is there. Sir, if you can put maybe an RSA just for those people who were there in the last session, whether we'll get a buy signal and RSI.
Yes, bullish.
Yes. No, it will not be there. It is anyway, actually this is lower. It should be higher here. No, sorry. This close to this close is lower, so we don't get a buy signal there. Yeah. So that is, this is a bullish harami.
Next one we saw.
You can take this as a confirmation action also, because next day it opened higher and it's still trading higher.
Yeah, volume also confirmed.
And if somebody is in short, I mean somebody entered short somewhere here and is still holding the position, maybe the time to.
There is a confirmation. Next day it can be evening star also.
Pardon?
It can be evening star also.
Evening star should happen where? No. Just a minute. Evening star is an indication of what? It is a bearish signal, bullish signal. Evening star is a bearish signal, right? So that should happen at the highs of the market. And we are at the lows of the market, right?
This is the evening star. Sorry, but exactly not the evening
No,
star.
what I'm saying is,
Ah.
it's a gap up has occurred there.
Yeah, right here. But this is actually, this body is much higher than this. Actually, this one here, yeah.
Not. This
Yeah.
is closing itself.
Here. No, that is true, but what I am telling is that evening star, this is not the place to even to consider an evening star there. What we have to consider here is a morning star. Because, I mean, most of these patterns in candlesticks are basically the reversal patterns. That's the advantage of the candlesticks. Perhaps they are the best, they provide the best of signals when we look at the reversals in the market. So here, something like a morning star is what we should look for, or any other bullish signal. When the market is falling, what is that we look for is basically a bullish signal, right? If you are short, we want to book the profit, or you want to enter when the market is turning up. Yes, sir. He asked one, Divi slab.
Sorry.
Because such a mass, this thing will give any significance.
So candlesticks we'll see. Otherwise,
Yeah, we'll suppose it's the top of the market,
bearish. Shooting star.
and shooting star, is it also something like a harami? No.
No, shooting star. also.
No. Prior, and compare it to the prior green. I think it is contained within the green bar. No?
No, sir.
Okay, fine.
Little higher.
All right. And here is, look at these three at this top. That is your evening star. A green, a red. Only thing is here, the other day actually it should be Possibly best thing is to have another red bar there, a red candle. I think I can show, just 1 minute, can you expand? I think there is a good here one, yeah. Yeah, stop it. This part. No, this is part is basically that shooting star. I saw
Evening star, sir.
evening star, yeah.
There, sir.
Yes, here. This part, yes. This is the evening star. But the problem there is that it's not really happening at the top of the markets, right? Already the market is in the correction when it reached there. This part.
Well, one more thing is whether it's a candlesticks or bear patterns. If a price moves such a long consolidation or long sideways in a narrow range, expected a big move either side. That was happened here. Actually, it is a bullish pattern if you look at the chart patterns.
Yeah, it's more a head and shoulder also. A head and shoulder bottom.
Generally, ascending triangle is a bullish pattern, but if it fails, the report fails, it's a negative, it becomes a descending triangle. The sharpness of the fall will be almost equal to this line.
I mean, these are all things where actually what happens is how do we read, like head and shoulders. When I look at, what I do is that if it is a bullish head and shoulder for me, I will consider that only when the right shoulder is higher than the left shoulder. That's what I mean, that is my first principle. Unless that is there, normally I don't. Similarly, if it is a head and shoulder top, that is which is a what we call bearish signal, the right shoulder should be below the left shoulder. Otherwise, it is only a personal. I am not telling that this is something like, but books don't talk about anything. There are a lot of charts which worked perfectly, giving the breakdown signal and market going down, at least into intermediate lows. But I found that the chances of a head and shoulder pattern actually giving reasonable returns, or the ratio of success is higher when the shoulders are compared.
Even since the consolidation, look at this period. But this is to triangle fade. Triangle fade, even if you delete this triangle, look at this area. Almost
There was also, I mean, actually, there was a bull trap with that green last green, this green one, giving as though it is breaking above the consolidation, and that's it.
bull trap on.
Yeah. And next day there was no chance for any
No
people.
chance at all. Alignment with the
Yeah.
gap down. In use.
No, that's why. No, I mean, for me, I think we also discussed this part. For me, the shoulder is here. So unless till the time the price is not moved above that, I didn't find at least any trading signal in that. Okay, it's a different issue that this came after this gap down. This was a what you call as out of blue. Nobody anticipated anything there. Sir, any other charts? We'll see. Otherwise,
Let us break for 3 and we will come back.
okay. I mean, these are some of the important patterns. It's not that this is the end of all candle patterns. There are a lot of other things also. But what I thought is that instead of dumping so much into this, at least a few things will take important ones and then, yeah.
In Nifty, actually there is one dozy happened in the daily.
Nifty rate, recent daily.
This dozy happened in the daily almost.
Ah,
Okay. This one.
that is looking to be a morning star. Huh? No.
This one.
Okay. That is Friday's price action.
Yeah, Friday's price action exactly. 1785 is the open price, 18 is the closing price. Almost 10%.
This is Nifty, sir.
Nifty.
Friday.
And, on weekly
Sir,
chart,
what about that at the top? I see something like island gap or something. I heard of island gap.
that is different case. That is different study, sir. Gaps are different study. You are right.
Only on gaps there are books, not just, I mean, a set of books are written only to understand, only how to understand gaps. Or gap up or gap down.
Nifty pattern.
No, 1 second. First, we
terms
will
of-
discuss this. This is a daily chart, it's in a doses. And on a weekly chart, it is in a gap up and it's in a hanging man and another hanging man. Maybe this one. And if you look at the bank nifty chart, also similar case. This is a weekly chart.
It's a doji.
Dozy and a hanging man.
Hanging.
A
It's a dozy. This dozy is called as
dozy and what you call a shooting star also at the top.
So these kind of patterns generally occurred at the tops.
Yeah.
Right?
Yeah.
If you go to Nifty, the similar
One minute, just one minute. Yeah, just see the pattern here. The dozy and then another dozy
and
with
actually even the
long.
daily that also, when you said the reversal, island reversal is the top. So this
No,
is island reversal.
reversal, yes. Where both sides you have the gaps.
Gaps, right?
Well, going up and also coming down.
This is island reversal and this is another island reversal. Here also gap, here also gap.
Highly.
Market reversals.
So don't use for targets. You cannot fix the targets in the pattern. Sorry. I'm very sorry. Since last 10, 12 years, right? And I think he struggled more than anyone else to learn the classes. Nasdaq events also he attended. And he learned the Fibonacci and Gann technique, some normal traders investment size, trader other size. So his experience he is sharing now in the Fibonacci with a little capital. Gann also. And don't miss that class because nobody in Hyderabad teaches you. So now the brief Fibonacci. Another 1.5
Fibonacci, Italian mathematician, he discovered the number series 0, 1, then he kept on adding this and we got, as you know, this series number. And dividing the numbers he got these ratios also, important ratios. 38.5, 50, 61.8, 78.6 ratios are very important for our market. And the extension markets are also 1.5, 1.618, 2.618, 4.23 for expandable markets. Okay, I'm not going into the basic this thing. Sir, రావట్లేదండి. Where is that? Yeah. Okay.
Right?
Yeah. See, why Fibonacci, why we are using in the market, it is present everywhere in the market, everywhere in the universe also. So everywhere, right from our human body to nature to the planetary motions or whatever it is, even the physical things, if you take out a table or a fan or anything, they are all interrelated with the Fibonacci ratios. You can find out also, even the number of petals, as Mr. Chari has pointed out, they're everywhere. So we have taken the ratios and we have kept it in the market and we are trying to get some use. Where do we use them in the stock market? We use them in the price and time elements. Stock market is nothing but price and time. We use the same in the price and time elements. So what we do from an easily identifiable swing, that is a major swing regarding the price, be it a top or bottom, we draw the ratios. What ratios? These ratios. These ratios. Apart from this, there is one more ratio, 88.8 or something like that. That is also very important. After that, it will be 100% retracement. Which is important? We don't know. As and when the market comes to these places, we have to cross-check it. Cross-check with our existing technical analysis. There is no single oscillator or indicator or whatever it is where we can do a single judgment. We have to use this in conjunction with our existing model. So no single technique or no single decision can be taken. This only has to be used in conjunction with our already existing whatever it is, whether it be breakout or a divergence or a trend line support or candlestick patterns or whatever it is. In conjunction, we have to take a decision. As a single point, we cannot take it because the market has come down to 38%. Then you can't say I'll go buy or sell. So that is only an indication. Like you're adding a weight to it, evidence. So single point decision, you cannot take it using Fibonacci. So we watch out when the price is coming down to these levels. Suppose the price is gone a big uptrend, then it is retracing to 38%. 38% means it will not be coming exactly 38%, it might come to 35, 38, 40 also. So you can't say I'll only wait till 38%. So when it is coming to this area, we have to find out evidence from other sources, oscillators, indicators, patterns. Then you both marry these things and come to a conclusion. So we want to club this with our existing method of TA, technical analysis. Whatever it is you are following, you have to club it. You can't say I'll just follow this thing and take a decision. You can't enter a market like that. You have to do a couple of homework. It could be a divergence. So when the divergence is happening at 38% or 50% or 61%, so that is giving more weight. The market is retracing. At this level, you have some divergence or a candlestick pattern as discussed in the morning, or maybe a trend line support or a breakout or overbought, oversold, or any other thing. So you have to marry these two. Major. Then after that, what we have to do, we have to take minor swings also into consideration. A major swing, we have to do it. After all this exercise, we have to take the minor swings also. In a major swing, you have minor swings also.
Can you show it?
Yeah, I will show it. You have to take the minor swings also into consideration. Why we have to take it? Because we want to come to an area where there is clustering. An area where there is clustering is happening. Fibonacci works on more on clustering. A major swing, one retracement. You have got a couple of minor swings. You take that also. Then all this together, there is some strong zone coming up. Then that is a high probability zone. So single point retracement will also work. It's not that it will not work. It will also work. But we want to have more clusters. when there is a cluster of an area forming from minor swings and major swings, then it is a strong indication, but there is no guarantee. There is no guarantee in technical analysis. We only work on probabilities. So this is the time part. Okay, I'll put up some charts, then you can see. So this is a swing we have taken. So from here, this is the top, this is the bottom. I have taken it. The market has come down to 61. So that is what I told you. Don't be very particular about that percentages. It will come near. Sometimes it will hit razor sharp. So sometimes it will hit that. But once it hits razor sharp, every time you should not look for that. It has crossed 50, but it is holding 61. So this is the area it retraced. From basing on this, we can't take a trade. Here you see the stochastic is also overbought. So put some 3-4 conditions here. Some oscillators, indicators, some patterns, whatever it is. So this is one indication, this is two indication. Go for something else also for confirmation. Then put some trade here.
Can we replace with the candlesticks then?
Candlesticks, sir. You find out any candlestick patterns are also there here. Is there any pattern here? Anything?
Yes. That shooting star.
This big bar, it is showing the price is pulling down. Okay, isn't it? No, this single bar, the price has come down, no. So you can put some candlesticks also here. Candlesticks, one oscillator, one indicator, or anything. The first one is the retracement. This retracement, see here 38 also it failed. So when it comes to 38, you should be preparing whether to take a trade or not. So 38 failed, then it went up 50, then went up 61. It can go up to 78 also, or 88 also, or 100% also. Or it can extend also. Fibonacci retracement doesn't mean it will come down.
No, but 38 went up, came down.
Went up, came down, and again went up.
It's not a continuous retracement.
So markets are totally irrational, that you accept it. So that doesn't follow any rules. We have to take out 23% of the market price behavior is cyclical in nature. Remaining is irrational. So we have to work in this 23% only. So if you get 100% hit rate, your market is only carrying only 23%. You are not hitting the entire market. So if your hit rate is 50%, out of 23% you are hitting only 50%. So market has come down. So what happens when it comes to 38%? You should be prepared. And if any indicators are there, anything, other signs are there, you go for a trade. Otherwise you have to wait. This is only an indication, idea. Market is retracing. It can go extend also. So this is one price retracement. You can take up something else also. Time also I'll show you. %, something. So this also you can see, this is retraced to 88% from this swing. Okay, 88.2. This is a small swing. Okay, market has expanded to Fibonacci ratio 1 point. This you measure it. Okay, this is 42,000, this is 38,000. What is the difference? Approximately 4,000. Okay, 4,000 into 1.65 times it expanded from here. The earlier was retracement, now it is expansion. In wave 3, wave 4, all we use these ratios. Wave 1, wave 2, wave 3, wave 4 and all. Wave 5 also. So this is the expansion. This is the earlier one was retracement.
Evening stock there.
This copper. It is holding at 50%. So big swing, holding at 50%. Okay.
Little right from
So is it Keltner channel?
38%.
See, this candlestick is holding at 50% here.
Sir, is that Keltner channel?
No, there is not a Keltner channel. That is a DMA, displaced moving average. See, the big swing happened. The retracement is 50%. See, any candlestick pattern is here? Huh?
Hammerhead pattern? Yeah.
So that is number one evidence. Number two, number three, stochastics is also over sold. So you are getting more evidence like this. Anything else you can add also. Anything is there you can add. So you have to step by step you have to analyze it. Fibonacci, stochastics, candlesticks, or any other oscillator or indicator. Any other chart you want to see?
What are the parameters of displacement moving average?
So that is irrelevant. That is,
Parameters.
I think 6 you have to take it. Plus 6 and minus 6. Plus 6 and minus 6. Don't go after that.
That's not necessary.
Not necessary. Only see the retracement part and add to it any other evidence. Oscillators or indicators or patterns or breakouts or anything. It's a big move. Copper retraced. Then again it went for another move from 360 to 414. So 50 rupees move. So this is retracement, sir. I gave retracement. No, this is a big swing. ఇక్కడ నుంచి ఇక్కడ స్వింగ్ అయింది, ఇక్కడ రిట్రేస్మెంట్ అయింది. సో దిస్ ఇస్ 100% అయింది కదా, చూడండి 100% ఇట్ కేమ్, 100% ఇట్ కేమ్ అండ్ ఇట్ ఇస్ కమింగ్ డౌన్ అగైన్. 100% is also possible. 88 is possible, 78 is possible, 61 is possible. Where the market will hold, we do not know. These are all ratios you need to work out. 25 ఆగలేదు, 38 ఆగలేదు, 50 దగ్గర ఆగింది, ఆల్మోస్ట్ 50. ఎక్కడ ఆగుతుంది అంటే మనకు కూడా తెలీదు. ఇట్ మైట్ కమ్ డౌన్ టు 61 ఆల్సో, ఇట్ మైట్ కమ్ డౌన్ టు 88 ఆల్సో, 78 ఆల్సో, అండ్ 100% ఆల్సో. This is only one area, like it is giving you a caution, it is giving an alert. Fibonacci will give you an alert. ఇక్కడ వస్తుంది, మీరు చూడండి ఏమైనా చేయొచ్చు అని. అంతే. సింగిల్ పాయింట్ ట్రేడ్ డెసిషన్ యూ కెనాట్ టేక్ ఇట్. ఎనీ అదర్ చార్ట్?
100% is also relevant because it becomes like double top.
Double, triple.
You're talking about cluster.
Cluster, yes sir, I will show you. So what we have to do, we have to get a cluster of this ratios. Also, see this is one major, okay? Okay? See sir, this is one major, okay no? And here what is happened here? Here. What happened? 100% minor swing. Can you see this? Can you see this? So what happened? We have got a double. This is a cluster. Okay? Got it? One is 50%, the other's minor swing is 100%. So this is a strong area. Stochastic is also over sold. Then some pattern, maybe some oscillator. Then it gives an evidence. Then you put up a trade. You'll see some other chart also for this clustering. So this is extension From here to here, the swing has extended for up to 1.272. It crossed. It almost touched 1.618.
Take Bank Nifty.
Sir,
Bank Nifty.
Bank Nifty. This is the Bank Nifty, sir. It has crossed 1.272. It is coming close to 1.618. So sometimes the price will fulfill this. It's general idea. The price, if it expands to 1.618, after that you got 2.3, 4.2 extension. To have an idea. It's not the market is coming down, it might go up also. Okay, we'll go for some multiple swings here. We'll take this swing also from here to here. Almost 50%. %. So you can see that this area is getting clustered from major swing and minor swings also. 1, 2, 3. One major swing from here, one from here, one from here. You can take it also. So when you get an area of cluster, it is a strong zone. Always go for clustering, not single retracement. At least 2, 3, if you have chance, as many as possible. Then you get some area like this, then a strong support zone. Here also see the oscillator stochastics is oversold. No, 2, 3 retracements. If you take it from major swing inside minor swing, you have to take 2 or 3 retracements. One big swing will give you 38%, one minor swing will give you 50%. Same area, the other swing will give you 50, 61, 38%. In the same area will become a strong zone. Sir, any other chart you want to see? LIC housing, yeah. LIC housing, what we can draw here. ఈ స్వింగ్ 61.8% దగ్గర ఆగింది. From here to here, see 61 point, it crossed 50, then 61. MACD divergence కూడా వచ్చింది ఇక్కడ. ఈ రెండు చోట్ల ఆల్మోస్ట్ లైక్ డబుల్ బాటమ్ వి గాట్ divergence also. So you have to look for extra evidence. One is 50% retracement, almost like a double bottom, then we got very good divergence. We can find divergence in other things also, ROC or RSI also. RSI is difficult to get. ROC also there is divergence. So you have to get more evidence and more weight. Fibonacci is only one thing. It is giving you an indication. Then you have to search for other oscillators or indicators or patterns or breakouts or divergence or anything. So regarding price is over, sir, or any other chart? Nifty, yeah. Nifty. What we can do here? Nifty. We'll have to go for extensions. From here, the market has expanded to, it's almost coming to 1.272, like Bank Nifty. Here also we can take this small swing. It has gone more than 2.6, so we have to add 4.2. .2 is still possible. What is that area? 9487. Possible or not, we do not know according to this expansion. Extendable ratios.
Can we do multiple?
Multiple,
Some higher low.
You want retracement or expansion?
Expansion.
Expansion. Only the two possibilities are there. From here, one is this. Okay, a small swing. This is the area. 1.272 is 9305. 4.2 is 95. .9305 is 1.272 extension from here, from this big swing. The small swing 4.25 is 9506. Anything else, sir? In price? Anything else in price you want to see? Low to high you take and take a retracement, multiple retracement. High to low also you take and take retracement, multiple. Then come to a strong zone. Then look out for other evidence.
Small swing ఉంది కదా.
అవునండి.
Confirmation.
కన్ఫర్మేషన్ ఏముండదండి ఇక్కడ.
మీరు అంటే జనరల్
చూడండి ఇక్కడికి వెళ్ళి ఇక్కడ స్వింగ్ అయింది కదా, ఇక్కడికి వెళ్ళి ఇక్కడ అయింది కదా.
ఈ రివర్సల్ వచ్చింది.
అదేనండి, ఇప్పుడు ఇక్కడికి వెళ్ళి ఇక్కడ స్వింగ్ అయింది కదా. ఇక్కడికి వెళ్ళి ఇక్కడ స్వింగ్ అయినప్పుడు ఎప్పుడు ఎక్స్టెండ్ చేస్తాం మనం? మార్కెట్ని ఎప్పుడు ఎక్స్టెన్షన్ చెక్ చేస్తాం మనం? ఇదా?
స్మాలర్ హై అయినప్పుడు బ్రేక్ అయింది కదా.
ఏది ఇదా అండి?
ఆ బ్రేక్ అయినప్పుడు మీరు కింద ఇండికేటర్ ఏం చూస్తారు? కన్ఫర్మేషన్ ఏం చూడాలి?
ఏ బ్రేక్ అంటారు? ఇదంటున్నారా? ఇదంటున్నారు.
అది బ్రేక్ అయింది కదా.
Double bottom breakout.
డబుల్ బాటమా?
డబుల్ బాటమ్
Double bottom breakout.
ట్రెండ్ బ్రేక్ అయింది కదా. ఆ ట్రెండ్ బ్రేక్ అయింది.
ఇక్కడ
స్వింగ్ స్మాల్ స్వింగ్ బ్రేక్ అయింది.
ఇక్కడ డబుల్ బాటం వచ్చినప్పుడు ఇక్కడ ఉంది కదండి, ఇక్కడ డైవర్జెన్స్ కనిపిస్తుంది కదా మీకు. ఇందాక చెప్పాను కదా, ఇక్కడ మీకు డబుల్ బాటం వచ్చినప్పుడు ఇక్కడ మీకు MACD ROC ఇక్కడ డైవర్జెన్స్ మంచిగా కనిపిస్తుంది ఇక్కడ మీకు.
అంటే రేట్ అక్కడే తీసుకున్నట్రా లేకపోతే అక్కడ స్వింగ్ బ్రేక్ అయినప్పుడు?
అదే సార్, ఇప్పుడు మనం ఇక్కడ వచ్చినప్పుడు క్యాండిల్ డైవర్జెన్స్ ఏమవుతుంది, ఒకటే క్యాండిల్లో రాదు కదా. ఇక్కడ ఒకటే క్యాండిల్లో లక్కీగా వచ్చింది, కొన్నిసార్లు రావట్లే మీకు, చాలా పోతుంది, డైవర్జెన్స్ అయినా పోతుంది. అప్పుడు మనం ఈ ట్రెండ్ లైన్ బ్రేక్అవుట్ తీసుకొని ఇంత పెద్దగా స్టాప్ లాస్ వస్తుంది. లేదు ఇక్కడే నేను తీసుకుంటా అంటే స్టాప్ లాస్ తక్కువ ఉంటుంది, రిస్క్ ఎక్కువ ఉంటుంది.
ఏంటంటే ట్రెండ్ చేంజ్ ఇప్పుడు ఇండికేటర్ కాకుండా ఇప్పుడు క్లియర్ కదా బ్రేక్అవుట్ అయినప్పుడు మనం తీసుకున్నప్పుడు ఏది ఇండికేటర్ చూడాలంటే
ఒక ఇండికేటర్ కాదండి, మీరు అన్నీ చూడాల్సిందే. 2-3 ఇండికేటర్స్ చూడాల్సిందే. మీరు స్టొకాస్టిక్స్ పెట్టుకోండి, RSI పెట్టుకోండి, క్యాండిల్ స్టిక్ పెట్టుకోండి, MACD పెట్టుకోండి. మీకు ఇప్పుడు మన ఈ ఫిబొనాచి రేషియోస్ ఎప్పుడు ఎక్స్టెండ్ చేయాలంటే ఫుల్ స్వింగ్ ఎక్స్టెండ్ అయితేనే ఎక్స్టెండ్ చేయాలంటే 100% దాటితేనే మనం ఎక్స్టెన్షన్ పెడతాం.
అది ఓకే. ఇక్కడ మనకి ఏంటంటే ట్రెండ్ లెవెల్ చేంజ్ అవుతుంది కదా.
అవును.
అక్కడ అది స్వింగ్ హై బ్రేక్అవుట్ అయిందనుకో ఇట్స్ పాసిబిలిటీ ఆఫ్ గోయింగ్ అప్ కదా.
100% డబుల్ బాటం కాబట్టి ఇది బ్రేక్ అయితే వెళ్ళిపోవాలి అకార్డింగ్ టు అవర్.
వెళ్ళిపోవాలి.
అవును. జనరల్గా 2-3 ఇండికేటర్స్ ఫాలో అవ్వాలి, అవే ఫాలో అవ్వాలి అంతే. సార్ ఎక్స్టెన్షన్ ఎప్పుడు కానీ 100% దాటినప్పుడే మీరు ఎక్స్టెన్షన్ పెట్టండి. ఇది ఫిబొనాచి. ఈ రిట్రేస్మెంట్లో ఉన్నప్పుడు మీరు ఓన్లీ రిట్రేస్మెంట్ గురించి ఆలోచించాలి. మార్కెట్ ఇప్పుడు ఇక్కడ ఉందనుకుందాం, ఇప్పుడు మనం ఎక్స్టెన్షన్ పెట్టకూడదు, ఓన్లీ రిట్రేస్మెంటే ఆలోచించాలి. మార్కెట్ ఎప్పుడైతే ఇది దాటి 100 అయితే అప్పుడు ఎక్స్టెన్షన్, ఈ స్వింగ్ దాటి 100 అయితే ఇక్కడ ఎక్స్టెన్షన్ పెట్టాలి. ఓకేనా సార్? రిట్రేస్మెంట్ 100% లోపల ఉన్నప్పుడే రిట్రేస్మెంట్, దాటితేనే ఎక్స్టెన్షన్, ప్రైస్ ఎక్స్టెన్షన్. ఈ ఎక్స్టెన్షన్లో మనకి ఈ రిట్రేస్మెంట్లో మనకు క్లస్టరింగ్ కోసం వెతుకుతాం మనం. మేజర్ స్వింగ్, మైనర్ స్వింగ్ అన్నీ కలిపి ఏదైనా స్ట్రాంగ్ జోన్ ఉందా చెక్ చేస్తాం. దాంట్లో వచ్చినప్పుడు మిగతాయి మనం చెక్ చేస్తాం, ఆసిలేటర్స్ కానీ ఇండికేటర్స్ కానీ. సార్ ప్రైస్ ఓకేనా సార్? రిట్రేస్మెంట్ చూపిస్తాను. ఫిబొనాచి కెన్ ఆల్సో బి యూజ్డ్ ఇన్ టైమ్ ఎలిమెంట్స్. టైం ఎట్లా అంటే ఇప్పుడు నేను చెప్పిన చార్ట్స్ అన్ని ఎండ్ ఆఫ్ ద డే అండి, అంటే డైలీ చార్ట్స్. యా, డైలీ చార్ట్స్. ఇందాక చెప్పిందంతా నేను డైలీ చార్ట్స్, ఓన్లీ ఎండ్ ఆఫ్ ద డే. దిస్ ఆల్సో యూ హ్యావ్ టు యూజ్ ఇట్ ఆన్ ఎండ్ ఆఫ్ ద డే. దో యూ కెన్ యూజ్ ఇట్ ఇన్ ఇంట్రాడే ఆల్సో, బట్ ఐ సజెస్ట్ యూ యూజ్ ఇట్ ఆన్ ఎండ్ ఆఫ్ ద డే. సేమ్ మేజర్ స్వింగ్ హై ఆర్ లో, అంటే ఒక స్వింగ్ తీసుకుంటే టాప్ టు బాటమ్ కానీ బాటమ్ టు టాప్ కానీ మేజర్, కౌంట్ ద నంబర్ ఆఫ్ డేస్ ఫార్వర్డ్. ఫిబొనాచి సిరీస్ నంబర్లు ఏంటండి మనకి?
0, 1, 1, 3.
యూ హ్యావ్ టు బై హార్ట్ ఆల్ ద నంబర్స్ అట్లీస్ట్ టిల్ 133 ఆర్ 266. ఎందుకంటే ఫ్రమ్ ఎ మేజర్ హై ఆర్ లో యూ హ్యావ్ టు కౌంట్ ది numbers, series numbers, that is 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, all those numbers. And these should be trading days, not calendar days. Trading days, not calendar days. So you got the difference, no? 2 weeks is a calendar day, but 2 weeks we have got only 10 bars, that is trading days. If there is a holiday, then it becomes 9. So we have to count only trading days. So what happens if you count in the future, you will get a probable time period for a change in trend. Always probable. And what is the tolerance we have to give? 1 day, that is plus or minus.
Starting point should be swing high or low.
It has to be. Minor swing, secondary. First we have to go for major swing. That if you look at the chart, it should be easily identifiable. From there you start. How to start? 3, 5, 8 Fibonacci numbers should have a minor swing to validate it. So if you start from a major low or major top, counting the series 3, 5, 8 within 1 day plus or minus should have a minor swing to validate this. Okay. Count trading days only, not calendar days. This goes on till the market is reacting to these numbers. You can count as far as possible as you are getting some results. Once it is stop giving results, then you abandon the count. Then go for a fresh count. After the major, you go again for the minor. Same clustering we want. First major, then minor. Then look out for clustering.
So the concept of cluster.
క్లస్టర్ అంటే గుంపు అండి, ఒక గుంపుగా ఉండాలి మనకి, ఒకటే చోట అందరు రావాలి, అప్పుడే మనకు స్ట్రెంత్ వస్తుంది.
Here, cluster of group of.
ఐల్ షో యూ గట్ ద బేసిక్ పాయింట్ కదా. రిట్రేస్మెంట్లో క్లస్టరింగ్ చెప్పాను కదా, మేజర్ స్వింగ్ నుంచి ఒకటి తీసుకుంటాం రిట్రేస్మెంట్. ఆ మేజర్ స్వింగ్లో 2, 3 మైనర్ స్వింగ్స్ ఉంటే అవి కూడా రిట్రేస్మెంట్ తీసుకుంటాం. తీసుకొని ఒకటే చోట మనకు వస్తుంది అనుకోండి, ఒక చోట 38 వస్తుంది పెద్ద స్వింగ్ది, చిన్న స్వింగ్ 50 రావచ్చు, 61 రావచ్చు. ఒకటే చోట అంటే నాట్ పిన్ పాయింట్, నియరెస్ట్ జోన్.
Then it is not the ratios. It's a
If you
number of days.
no here it is number of days. The price is ratios. Here also we have ratios, but here it is trading days. That is very particular. Calendar days you forget it. Okay. And don't look for accuracies. All probabilities. Minor swings also to get a cluster of area. We have to give a tolerance of 1 day. So continue to count the market as long as the market is reacting to this Fibonacci count. Once it is not reacting, then you can leave it. Same clustering is required here also. And once you get a count, don't put up a trade. Go for price retracement at the level or extension level. Then go for candlestick or breakout or oversold, overbought. So many things are there. From a low to high or a high to low, count the number of trading days. And next, this is the other one. First we'll see this, only counting, plain counting we'll see. Yeah, I'll show it. This is a swing, easy to identify. From here I counted, this is another swing. What happened? 22 days has come. 21 is a Fibonacci number. Okay. And 1 day tolerance. We got a swing, market went down. Isn't it? You getting? From here I have started the count. Here I stopped it. Number here is 22 here. So this bar is 22 bar. Fibonacci count is 21. So there is a tolerance of 1 day or 2 days also sometimes. Here the market reacted, then came down. But basing on this, we will not put up a trade here. We will go for other confirmations also. Sir, anybody is not getting, please ask. From here I have started the count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Here I stopped it 22. Fibonacci number is 21. Sorry, sir.
Sometimes we have to abandon if the minus swing is not there.
So right now it is reacting now, sir. Why to abandon?
No, just one.
See, but to start this, you need to have 3, 5, 8 as swings. See, 1, 2, 3. There is a small swing, no? Small also, no problem, but there should be a swing. Okay, see 1, 2, 3, 4, 5, 6, 7, 8. 1 plus bars, it came down. So just to start, to validate that count, we have to give 3, 5, 8 bars as a minor swing. Then after 13, you can trade. Here 21, we got a beautiful chance here. See, the market came down here. Sir, 144 is a Fibonacci number, no? Anybody? Huh? 55, 89. 55 plus 89, 144. From here again started. Here I got 144 number. See. This is a major turning point, isn't it? From here you start it. Here is the end. What is the number I got? Bar count? What is the bar count? 144. 144 is a? Okay. Same thing. From minor also we can start, no? To get a cluster. Same chart. What happened? What happened? From here I counted. From here, what is the number I got? 80? 80? 89. 89 is a? Sir, you are not following everybody. From here I got 144 to this one. From here I got 89. It's a small cluster forming, isn't it? It is easy subject, sir, not difficult, I think. So from here the bar count is 144 to here. From here it is a major, this is a major high, no? So I started from here also. Sir, I got 89. So I got 144 here, 89 here. I got 34 also from here. I'll show you. So 3 numbers coming together. So it is a strong area. Market will go up or down, I don't know. that, but it's a strong area. See from here, how much? 34. Okay. So 3 zones I got it, 144, 89 and 34. And here also indicator is showing over bought. Put some other evidence. You are getting more weight. Put up a trade. You are getting, sir? No. Huh? You have to count from a major top or a major bottom. After that, do minor top and minor bottom also. Any common area you are getting, that is a zone you have to watch for. Earlier we used price, now we are using time. Time you use it only trading days, not calendar days.
In our software, we don't have.
You do it manually, no, what is there? What is the big deal? Do it manually.
Workout is not.
No problem, sir. Do it manually. You have to do it manually only. You can do it. So one more technique.
It also varies with the time series,
What time series, sir?
weekly times or monthly times.
We have to do it only on EOD, that is on daily data. If you want to do it on weekly or hourly, then again you have to do a lot of homework. Because I do it only on EOD, I am telling only on EOD. You can do it, but before that you have to work for a couple of months to get an idea. You simply can't go tomorrow and put up a trade basing on 5 minutes, 89 bars or 144 bars, you can't do it. Always you have to work on it. Obviously. But every time it will not work. That is the main problem. All oscillators will work, all indicators will work, but not every time. Every time the stochastic is showing overbought, you can't put up a trade, or oversold, you can't put up a trade. That is the main problem. So that is one technique I told you, Fibonacci series counting, plain counting. 358 you have to validate, look for 13, 21, 34, 55, 89 bars for a probable change in trend. Okay. Now this is one more small technique, same Fibonacci count. This is a low and this is a low. Okay. Getting it? This is a low and this is also a low. From low to low you mark it, and 1.618 and 0.618 are the areas to watch, because 0.618 is a Fibonacci ratio and 1.618 is also a Fibonacci ratio. From where we have to count?
Can I come again?
Yeah, I'll do it. From, you put up low and low. A low to low easily identifiable. It should be easy to identify. Then what you do? From low to low you mark it. Then extend into the future only two ratios. What are those? 0.618 and 1.618. Why it is showing 2? Because we have added this 1. Okay, the software has added this 1. That is why we are getting, instead of 0.618 we are getting 1.618, and instead of 1.618 we are getting 2.618. These two areas you have to watch it. Here you missed it by 1 bar. Here within 1 bar you got a bottom. You are getting it? The same way you can do it with the tops also. Two tops, extend it 0.618, 1.618 zones. Any doubt, sir? Normal series counting is one method. This is the other method.
Can we count in Nifty now?
Huh?
Nifty.
Nifty.
Can we play the same card in Nifty?
And Fibonacci you have to work for a couple of at least 1 or 2 hours to get some understanding. It's not that you put up a chart suddenly and you get a, you have to work on every 1.618 it has not reacted. So every time it will react, no guarantee.
Then 425 is
425 we don't take into account, though sometimes it reacts.
Here I think better thing is to take the highs.
Okay, we can take the highs also. We'll go back and see the highs. These two, sir.
No, those highs.
This one.
No, that high now there's no point to it.
Which high?
Left side slightly left. Yeah,
This one.
Yeah.
This high too?
This high to the
This high.
double bottom. Double bottom.
This high. Yeah, we can take it that way also. You have to try out different combinations. What happened? 0.618. 1.618 is yet to come. That is on the day 5th of April. 5th of April, we are getting a 1.618 of this.
Will it be bottom or top?
That we have to decide, sir. On that day, we have to see it as the market is coming, we have to go and check it. Whatever it is. Yeah.
The action takes place on the day somewhere. One day before or one day after.
So time series is like this, sir. One is plain counting, the other is take two tops or two bottoms, then extend it 0.60618 and 1.618 to get one probable date. No 100%, only probability. So two tops, two bottoms, plain counting. And this is very important, sir. You cannot analyze all the swings in the market. All the swings are there, you cannot analyze. This is one very good thing. You may have a dozen softwares or dozen indicators or dozen techniques. Sometimes some swing you will not be able to reason it. You cannot calculate it. Why? Because it is coming under 75% irrationality. Only 23%, 30% is only market is rational, cyclical, where you can do some analysis. Remaining part you cannot. So that sometimes you cannot analyze it, sometimes you cannot read it, sometimes you cannot justify it. That is very common. All swings you cannot analyze it. Sir, any questions you can ask? These two also you can combine it, price retracement and price counting, then put some indicator.
This Fibonacci system is applicable to all segments in all times.
All times was there, but you have to do some homework. You can't simply put up a trade.
Any technical analysis can be applied. If there is a price and volume, any technique can be applied to anything. That's a simple
For a non-trending situation. Trending situation as well as non-trending.
Why do you want to go for a non-trending? Always go for liquid stocks. Liquid stocks is first preference as a trader. We got maybe 100, 200, 1,000 stocks. You cannot open all the stocks.
basic rule is if it is not trending, do nothing. Then it market is
Problem is only you have to go for liquid stocks, volatile stocks,
Supposing it is a channel.
and as few as possible.
channel means channels also swings will be there. Okay, up and down.
Depends on width of the channel.
Width of the channel. But only
Very
thing
few,
is
stick
that
to very few.
market is
If you want to
stable,
trade,
don't play anything.
you have to stick to very few scripts. If you want to trade, you can't open a chart randomly and put some stochastics, then come to a conclusion.
Rather than if you want to apply from the weekly charts, what are the working units
Weekly chart for what, sir?
to liquid stocks?
No, what do you want? Fibonacci? Same thing you can apply. Same thing.
You said that you had to work out something.
You have to work. No, you can't simply go and do it. No, even the daily chart also you have to work. No.
All swings are evening.
Okay.
Same rules will apply to even weekly charts also, hourly chart also, even 5-minute chart also it will apply. But what I am trying to tell you is don't go tomorrow and put up a trade. You observe it for a couple of days.
You said you pass the charts, you start analyzing it. So weekly charts also will apply.
100% it will apply. Weekly chart or daily chart or hourly chart or anything it will apply. It is there. But based on only on this retracement or extension, you can't take a trade. That is what I am trying to tell you. Put some other indicators or oscillators or patterns or divergence, then add some weight to it with Fibonacci. In Fibonacci you got circles also, some rings are also there. So many things are there. Fibonacci. This is only the basic thing. With this also you can start working.
What is the rings?
This same ratios 0.382, 0.6, 618. You have some extended ring circles will come. So some softwares will have it. We can't, it's very difficult to understand. So as of now, you can start working with this series counting and this swings. But you have to look for clusters only. Otherwise, it's very.
This is the one. It is 2016 February to. This is a major trend, right? This is September 2016. Almost 7 months. From here to here is a major trend is still up. Okay, but intermediate trends. These are all intermediate trends only. Structural bull market since many years, right? That is intact even now, unless until it breaks this level. I think 74, 75 level, we are bull market only, right? As long as it is in that trend. When you are looking at the longer period time, more than a year to 2 years. So when come to the analysis to the daily charts, you want to trade very short term. When you are a trader in derivative market, then these time frames will not work. But these time frames will work even in the derivatives also. Suppose you are finding a pattern in a bearish pattern and a monthly chart or a weekly chart, go for a option strategy for the next month futures. No, we are in just another 5 trading sessions in this month. So which will not, option strategy will not work in that kind of longer time frame breakdowns. So if you are a derivative trader, your strategy must be little daily to 1 hour. Don't go beyond the 1 hour chart, like 15 minutes, 10 half. Wants to form in a daily chart or an intraday pattern. Any pattern requires at least 10 bars. Even a flag pattern requires a 10 bar, 7 to 10 bars. That is only 6.5 hours. 7 bars will come in a day. So which is not possible to form a pattern at all. So 1 hour bar will continue for the next few days also. If you are following the trend line technique, if you are following a channeling technique or a candlestick patterns. Even in the candlestick patterns, so after confirmation, the move will go to 3 to 5. The next bar is a confirmation, and from third bar onwards, 3 to 5 bars. That means 8 bars. Right? So time frame is very, very important if you are a positional trader. If you are an intraday trader, you don't want to continue the position, then you think of less than 1 hour, half an hour, or 15 minutes. Okay. Most of the time is trading market. Generally, that happens in the opening move or closing move. Short term, very intraday basis. So now, analyzing any chart, suppose you take a Bank Nifty daily chart. This is the chart. So we are at the all-time high of exhaustion, and almost the overbought from the overbought situation, reversing downside. So your strategy is expense. That means a month. So you cannot take any position now for this month series. Not a very short moves. Generally, in a Fibonacci ratio, what it is, if you take a longer period, so you are able to catch more number of points. Right? So take
The primary part. For example, we talked so much of it closing and a daily chart. The price movement, remember when we are talking about a candle or a bar, price range is within the boundaries of this bar, right? From daily, when we are going down to hourly, half hourly, 15 minute, whatever, it operates within this boundary. How do we try a triangle? If you look at what is a dozy on a higher time frame, when you go down in the time frame, time frame below, it emerges into a new pattern, which is actually a single doji on a daily or a week. So these are the things we should be in a position to understand first. What is the relationship? Why we want to choose a particular time frame? And if you are working on the daily time frame, should we confine only to daily time frame? If that question to be answered by individuals. It's not that somebody can answer that question for me.